What's going on, everybody? It is your boy Stas here. Welcome back to another video. So check it out. The markets are closed tomorrow. It's Columbus Day, but we still got to break down my game plan for this upcoming week. We're going to go over stocks I'm looking at, all of which pretty much are reporting earnings. And of course, we have to break down the markets in general, what I'm watching for this upcoming week. So sit back, relax, take a sip of your coffee, and let's dive into the video. And if you guys want some free stocks, get your 15 stocks from Moomoo and your 12 stocks from Webull, linked right down below, and let's get into it. So at this point, you guys all know, you should know, unless you've been living under a rock the past couple of weeks, the markets have been destroyed, especially on Friday. Friday was an absolute bloodbath. After we got the jobs report Friday morning, we had the Russell close down 2.9%, NASDAQ down 3.9%, the S&P down 2.8%, as the Dow went down about 2.1%. And believe it or not, guys, I know it's crazy, believe it or not, the VIX only went up 3% on Friday. It's hovering right around 31 right now, and we have gold at about $1,700 an ounce and silver at $20 an ounce, and both of those, did not do well at all on Friday, too. Pretty much it was a bloodbath all across the board, no matter what you're looking at. Stocks, crypto, metals, it was not good whatsoever. And you guys probably know this upcoming week we have the CPI data coming out for September. And let me quickly pull this chart up for you all so you can see exactly what's been coming out, in terms of these numbers the past couple of reports, really for the past year at this point. You guys can see here on the bar chart. So this shows the 1 month % change in CPI for all urban consumers. And this is actually the report from last month when we got that surprise 0.1% increase in August, which you guys can see here. The all items index, if I just highlight it so you all can see it, increased 8.3% before the seasonal adjustment. So this is what we've been dealing with, right? High inflation, very high, especially, in February, March, May, and June. I mean, look at those March and June numbers, guys, 1.2, 1.3%. respectively. And July, it pretty much flattened out, as you guys probably remember right here. We came in at 0. And last month, August, we were supposed to come in at 0 as well, if I'm not mistaken. And again, it surprised a little bit to the upside. And if you guys remember that day that we got the CPI data last month, that time period in general, we sold off pretty aggressively after that. So is this CPI data this time around, which comes out on the 13th at 8:30 a.m. on the East Coast, is this going to spur an even bigger sell-off in the stock market? Because going back to this chart here, let's go back to ThinkOrSwim very quickly, guys. You can see last week was not pretty. Like I mentioned, I mean, we sold off a good chunk on Thursday and Friday, even though we ran up a little bit in the beginning of the week last week. We still ended up selling off and closing. The Bears won the week, I'd say, based on how we ended up closing. So is this CPI data going to cause an even bigger sell-off to the point where maybe we get a surprise on inflation and then we start going to take 355 out on SPY? Maybe Triple Q takes out on the downside here 264, which, mind you, these were the lows from a couple of days ago. So this is going to be an interesting week. Again, Monday, it's Columbus Day. The markets are closed tomorrow, which I'll probably make another video tomorrow. Who am I kidding? We're going to talk about some more stocks, guys, so make sure to subscribe. And we're going to have a short week. So it's probably going to be another rocky one. Let me know your thoughts in the comments, as always, guys. And if you're enjoying the video, finding value, hit that like button. You might as well hit that like button. And with that being said, let's talk about some stocks here. We have 10, maybe a couple more, because we do have some subscriber requests at the end. We have a bunch to break down. So Pepsi's reporting this week. Let's start off with Pepsi, which I think I mentioned in a previous video here recently, but I'll cover it again because these videos on Sunday typically get, it's funny. I don't know how it's funny how the algorithm works. A lot of these videos on Sundays get the most views. I don't know why. Just how it is, for my channel at least. And if I can get this pushed out to more people know what to look out for, what to expect, right? And you might as well share the video if you want to share with the friend as well, so they can see these stocks. But this week we have Pepsi, which is reporting on the 12th, which is what? I think that's on Wednesday in the morning, 7:15 Central Standard Time, and we can see very clearly, like I mentioned recently when I covered Pepsi, it is very oversold. It's down about 12%. It's officially in correction territory, and as of now, we're at the bottom of this channel. Now, are we getting a lot of buying pressure yet? No, we're not, but if we ultimately get buying pressure towards the mid 160s, we start getting a nice pop here, maybe we break that 50 SMA at about 166, there could be some upside here on Pepsi. And they report again this week in the morning on Wednesday, or whatever day that is, on the 12th. And EPS is looking to come in at $1.84 on revenue of $20.79 billion, which would be up, if they did $20.79 billion, 3% year over year. And mind you guys, all these numbers we're going to share today, EPS, revenue, these are all estimates. And, the revenue EPS might come in a lot lower than that, maybe a lot higher than that. Who knows? These are all estimates that, I found online. I think these are pulled from Yahoo Finance. So, yeah, Pepsi, watch out for it. Another one that you guys got to watch out for is DAL, which is Delta Airlines. This went down 4% on Friday, and overall, you guys know, the airlines have not been doing well. Delta's down way more than 4% over the past couple of months, and they report earnings on the 13th, which I believe is on Thursday. That is before the market at 9 a.m. Central Standard Time. So they're getting destroyed. The stock is, at least, and it's going to be interesting to see how things go, end up playing out here. With everything going on with energy, Europe, that obviously has some impact on the airlines heading into the winter here. So they're looking to do $1.55 EPS. That's the estimate for Delta Airlines. And their revenue is looking to be about $12.89 billion, which would be up 40% year over year. So if we're looking at the year over year, guys, not bad for Delta. 40% on revenue, but obviously, that's got to do with them shutting down, for COVID and then reopening and ramping up business. And obviously the year-over-year numbers are going to be good because of that. You all know that, right? So at this point, we are at a pretty bad spot, I'd say. The chart does not look good. I would not personally touch this stock unless we start getting some serious price action above, let's say, 35, maybe even higher than that. Which, who knows when that will come, if that even will come. We have no idea here on Delta, but overall, I'm covering it. Obviously, I'm putting it on your radar because they report earnings this week, and we don't have many companies reporting earnings this week. So we got to talk about as many as we can, right, guys? So mark is at or above $35 is where I'm going to put my alert. And don't worry, because later in the month, which we're almost in the middle of October, time's flying, guys. Later in the month, we have big tech, which that will get interesting. That you're going to want to be subscribed for that. Let's just put it that way, guys. So another one we have to talk about for this week is Dominos Pizza, which is ticker symbol DPZ. And clearly this inverse head and shoulders I drew out a couple of weeks ago did not play out. So let me just clear that drawing set. Let me get rid of it very quickly because, again, it did not play out. So we have Domino's Pizza this week, which, mind you, just hit a $300 low. It just hit a fresh low just a couple of days ago. It took the lows out from the middle of May, which were right about at $320. So this is not looking very bullish at all. In fact, the bears are clearly in charge. We're under the moving averages. We have a death cross. So they report on Thursday morning. It looks like a lot of these companies report in the morning, and they're looking to do EPS of $2.99 on revenue of $1, or not $1, imagine $1, revenue of $1.07 billion, up 6.9% year over year. So not bad. Domino's 7% rev growth year over year. All right, not too shabby. And if we look at the all-time high here, it's got to be over 500, right? Yeah, $567 was the all-time high about a year ago. Not even, guys. This was in the beginning of 2022. And look at that. This is a clear as day head and shoulders on Domino's Pizza. Do you guys see that? Boom. Stock chart does not look good. This probably could start going if they, honestly, if they completely drop the ball in earnings, guidance does not look good. Who knows? We're speaking, just thinking out loud, right? This will probably take that 300 low out, no doubt about it. And from there, going back to that 3-year chart, where were we before the pandemic crash? Wait a second. Did this stock, it doesn't even look like the stock crashed. Hold on a second. Whoa, look at that. I mean, it did crash a little bit, but it looks like, okay, this is very interesting. This stock actually soared before the pandemic, right before we actually got that crazy, announcement in the middle of March and everything started happening. Right before that, they just reported earnings and the stock went up 30%, it seems like, in a couple of days. So we ran up 30%, dumped, but pretty much got back to where we were before we ran up 30%. And by we, I mean Domino's, right? So really didn't lose much. So the COVID crash really did not affect Domino's. It was at 275 before the COVID crash. It ran up to 385 in a couple days, which is crazy. Then it got right back down to 275 pretty much after the COVID crash. This was in the middle of March, roughly, in that time period. And then it obviously ripped all the way to 500. So that's interesting. I actually have not seen that until now. Domino's really got lucky there. Well, I don't want to say Domino's, but the shareholders of Domino's got extremely lucky. And honestly, again, going back to what I said before that, at $300, if we break there, we're probably going to start going down, I'd say, to that 275 marker, which is to tie this all up, which is where we were right before that earnings report, right before the COVID crash. So keep your eyes on Domino's Pizza this week, guys. It's going to be an interesting one for sure, to say the least. We also have Progressive this week, PGR. This is one that the chart looks pretty dang good, if you ask me. I mean, look at this. If I pull up the channel tool, are we not clearly holding an uptrend? Are we not, based on last week's price action, breaking out of the 180 SMA? I mean, we're doing that. And we do have resistance here at the 50 SMA. Keep that in mind. But if I put my alert here at 125, which I'm about to, if we do break that point, there's going to be probably a push to 130, maybe even higher than that, 133, 134. That's where this thing could be going. Top of the channel, meaning it could have another 4 or 5, maybe even higher percentage points of upside from where it is right now. So PGR, I like it. Set your alerts. Their revenue is looking to be about $13.47 billion on EPS of $1.49. So let's go to the next one. BlackRock. This is also, and wait a second, what day is Progressive? Almost forgot there, guys. On the 13th, which I believe is on the 10th Monday, Tuesday's the 11th, 12th Wednesday. Yeah, Thursday is when Progressive is reporting. Thursday in the morning. So the next one here is another one, which is BlackRock, guys. BlackRock, unlike Progressive, the stock has not been doing well. It has not been doing well at all. Look at this. BlackRock was at 973 back in November of 21. So about, a year ago? And now it's down 43% from that point. So it's heavily in a bear market. And we also have a head and shoulders clear as day here on BlackRock. And if you notice, have you noticed this, guys? If you pull up the 3-year chart on a bunch of stocks, a lot of them have head and shoulders playing out. A lot of them. BlackRock does clearly. Domino's, and there's a bunch. We could talk all day about those, but at this point, this does not look like it's going to recover anytime soon. I mean, we just took the lows out from June, July at about 580. We're now at 550. If these earnings bomb, who knows? I mean, they're expected to do $4.23 billion of revenue, which would be up 16% year over year on EPS of $7.66. But who knows? If they bomb, guidance is not good. This could start coming down even more. I mean, where could we go here? Pre-COVID crash, where was the stock? Well, forget where it was before that. During the crash, it was at $323. And before that, which, mind you, look at this. This is even more bearish. We just took out the pre-COVID all-time high, which was at 575. We just failed at that point as support. This could free fall even more, in my opinion. I'd be very careful here with BlackRock, ticker symbol BLK. So now let's transition a little bit. We got some banks, big banks to talk about. We have JP Morgan this week at the end of the week, I believe on Friday. Let me double check. JP Morgan's on Friday, and this thing is down. We've covered it recently, but I'll say it again. It is down a lot. You can see here the all-time high on JPM was 172, I believe. And now on the long-term chart, one thing that this really has going for it is if you look at, let's say, going back to that shorter term chart, if you look at the 4-hour, this stock looks like crap. It's down 35%. You're going to look at this. You're going to be like, it's downtrending. But if you pull up the max chart, you're like, wait a second. This does not look that bad. Look at this chart, guys. This JP Morgan chart dates all the way back to the 80s, right? I mean, This is insane. It got way overheated at 172. Now we've come down to 105, which, mind you, we were just at $105 back in 2019. I mean, it's not like we haven't been here in years, and the trend looks pretty good. I'd say the uptrend is clearly holding by the looks of it, right? And maybe we have a little bit more downside. Maybe it does come down to that COVID crash level, which is at 75, 80, 85. 90 even, that's possible. But even then, the trend would still be holding. And to be honest, if this thing comes under 100, I think I mentioned this maybe in my recent video, one of the recent videos, I forget which one, but I think I mentioned it. I might add a little JP Morgan. If it gets to that 85, 90 level, I'm probably going to consider buying a little bit. Nothing crazy. I'm not going to make it a huge position or anything even close to a big position, really. But just a little bit, maybe 100 share, or not even 100 shares. Maybe like 50 shares or 25 shares. I don't know. Maybe it's a little starter position, because I've never really had, I've told you guys my horror story with Wells Fargo. I lost a ton of money with them a couple years ago. But other than that, I've never really had an individual bank stock, really, that I've held for a long time. I've traded some. I've held some for a couple months here and there, a while back. But nothing that I've held for a long-term hold, which I feel like JPM at 80 to 90, I'm going to consider it. So they're looking to do $2.91 in earnings per share on revenue of $32 billion, which would be up about 7.8% year over year. Not too bad. We also have Morgan Stanley, MS. They're reporting this week as well. They're looking to do EPS of $29.37, and I'm not sure, or maybe that was wrong. I might have read that wrong. I'm not sure what the revenue number is either. I couldn't get that one. But overall, this chart doesn't look that bad. It kind of does look bad, the 3-year chart. But let me see the max chart. I think it didn't look bad last I checked. Yeah, it doesn't look that bad, right? If you look here on the max chart, you look a couple months, or this dates more than a couple months, couple years rather. I mixed the words there, guys. A couple years ago, this is 10 years rather. You can see we ran up too much to 107, 110. Now we're seeing a nice retracement. And sure, this could come down even more, maybe to $60, 65, 70. But overall, Morgan Stanley is looking like a decent dip buy. I'm not telling you to buy it, but based on that chart, these banks look pretty decent. Let's see Wells Fargo. Like I said, I had a nightmare play with Wells Fargo a couple years ago. I lost a ton of money trying to buy it, and you guys remember a couple years ago what happened with them, the fraud. We're not going to get into that in this video, but I bought them after that, thinking they'd be able to recover, which ultimately, if I held long enough, I would have made money. But this was 4 or 5 years ago we're talking about. Or maybe even, I forget exactly what, time's flying. Like I said earlier in the video, I forget exactly when it was, but it was during that time period. It collapsed. Yeah, right around here. No, that was the COVID crash. It was before that. But overall, Wells Fargo is this week. The chart doesn't look that great. The max chart on this company, you can see this chart here looks like crap. From 2015 to where it is now, it looks like crap. And I think right around in here is where I was buying it. 2018, right around this time period, lost money on it. I got to look back at my statements and see exactly where, when, but it was a disaster. Let's just put it that way, guys. So Wells Fargo, $1.09 EPS on revenue of $18.75 billion. That's what they're, projecting right now. And another one that we have for this week, transitioning from the banks, and we do have a couple more banks. I think we have Citi. We have Citi this week. We have, maybe that was it. Let me pull up my notes here. They're on my notes. Give me a second, guys. We have on Friday, that's another one. We have U.S. Bancorp, Citi, Morgan Stanley, JPM, First Republic, PNC. So there's a bunch of other ones, but we're only going to cover a couple in this video, guys. And maybe I'll cover more tomorrow, so make sure to subscribe. I might make another video tomorrow. I probably will. But what else do we have here? The last one, United Health Group. I almost lost my train of thought, guys. United Health Group is this week. Let's see what day it's on. It is on, and mind you, guys, all the banks are on Friday that we just mentioned. They report Friday morning. This is on the 14th, which is also on Friday morning, United Health Group. So overall, we have a wedge. Higher lows, lower highs are being made at the same time. You guys can clearly see that. And we have a resistance point at 500, or not a resistance. Well, I guess it is a resistance. My alert is right at that point at about $530. And on Friday, this stock actually collapsed. It went down about 3%, $15 a share. Not the best day at all for UNH. And they're looking to report this week. And who knows? It's a little bit oversold right now at the bottom of the wedge. Do we get some buying pressure at about 500, 505 to maybe get us back towards 530, maybe a little bit higher than that? We shall see. So they're looking to do EPS of $5.42 on revenue of $80.5 billion. So set your alerts. I might as well set a mark is at or below alert as well. I'll put that at 5. Let's do it at 500. Mark is at or below $500. Create. There we go. So if you guys stuck till the end, we're going to do 2 quick subscriber requests. And mind you, if you guys want me to cover any stocks, drop them down below in the comments, the company name, the ticker symbol, what you want me to look at. Let me know in the comments down below. So right off the bat, this is Cameo Corp, and I actually haven't looked at it until now. But right off the bat, I'm noticing we have a wedge, right? You guys see that? Right off the bat, overarching wedge here on the 4-hour time frame. We've been making higher lows for months. You guys see that right here. Boom, boom, boom. But ever since the middle of April, we've been making these lower highs. And now we're pretty much wrestling around with these moving averages on the 4-hour chart. We're really trying to pick direction. So, yeah, I mean, this one's got to have a couple days to play out, really. I mean, it's either going to end up dumping under 2650, which I'll put a mark is at or below there right now. Right, let's do that now. 2650. It's either going to take that point out and test the lows from the end of September, which would obviously not be good for the bulls, but if you want to go long this thing, you're going to want to see it at least break 2750 on the upside, and you can see a couple days prior to that. Let me see here. Yeah, a couple of days ago, we can see we failed at about 28-ish, 2750. So if you want to go long on this, you got to get it above 2750, or else you're vulnerable here for a dump down towards about 2375. So I'd be careful. Doesn't look that bad, but it just needs some time to play out. 2750, 28's got to break from there. 3031, the highs from the beginning of September, that's where this could be going. So another one is RIG, and I haven't looked at this either. So let's see here. RIG, all right. This looks like it's a penny stock, Transocean Limited. Let me see here if I can get this channel tool. What you guys notice is it's clearly in a downwards channel. We tried breaking out of it. Well, we're probably going to try again this week, but we tried it last week. We failed, even though this thing had a huge run from 230. That was in the end of September up to where it was last week, 308. We still failed breaking out of this 180 SMA. Now, if this starts breaking above 390 to $4, which is the clear resistance that we were facing back in the beginning of August throughout the beginning of September, that's where things could really start turning around for this. But for me, guys, this, if anything, looks more like a short. I mean, I don't know the fundamentals behind it. I don't know if there's any catalyst that's going to come in the short term that might pop it off, but this looks more overbought than oversold. We got clear selling pressure at the 180 SMA on Friday. I feel like this might be vulnerable for profit taking, maybe a dump. I don't know. I'd be careful. But again, if it breaks $4, which I'll put my alert there now, mark is that we're above $4, hey, maybe we start breaking out. But we're not there yet. The reality is we're about $1 away from that, which for a $3 stock, there's some ground to cover. So with that being said, guys, I'm going to wrap the video up. If you enjoyed it, hit that like button. Make sure to subscribe and check out my Patreon if you want all my real-time moves in the market. That's linked right down below on Patreon. And you could also get your 15 stocks from Moomoo with a $100 deposit and your 12 stocks from Webull with any amount deposited. And with that being said, cheers, guys. I will catch you in the next video. Have a great rest of your weekend. Peace out.